Hey everyone, welcome back. Tomorrow, January 30th, 2026, SoFi Technologies reports its Q4 2025 earnings before the market opens. And with the stock often moving sharply on these prints, it's worth a quick preview. This is just an overview of what to expect, no advice here. The key message up front: whatever happens to the share price tomorrow, whether it gaps up 15% or drops 10%, one single reaction does not define SoFi's long-term potential. The real story is whether the company keeps adding members, cross-selling products, improving margins, and moving steadily toward consistent profitability. Short-term noise fades. Sustained execution builds the value. Consensus estimates for Q4, adjusted EPS is expected to come in around $0.11 to $0.12. Revenue is forecasted at around $982 million. SoFi has been a very consistent earnings beater lately, surprising positively in each of the last 4 quarters, with an average EPS beat of about 45%, and often higher on revenue too. Revenue tends to come in ahead when member adds and product uptake exceed expectations. If the pattern holds, and Q3 was a strong beat, there's a realistic chance we see something like $0.13 to $0.14 EPS and revenue closer to $990 million to $1.01 billion. Here are the main things to watch tomorrow. First, member growth. SoFi has been adding hundreds of thousands of new members every quarter. Pay close attention to the total member count and whether the quarterly ads stayed strong or showed any slowdown. A big beat here usually lifts sentiment significantly. Second, products added per member. This is one of SoFi's strongest long-term drivers. The more checking accounts, credit cards, investing accounts, and loans each member opens, the higher lifetime revenue per user becomes. If this metric keeps climbing, it signals very sticky and profitable growth. Third, guidance for 2026. The quarterly numbers matter, but the full year 2026 outlook on revenue growth, adjusted EBITDA margins, and the timeline to GAAP profitability will carry much more weight. Strong, confident guidance could be the biggest catalyst. Fourth, credit quality. Personal loan delinquencies and charge-offs have been trending down nicely. Watch the provision for credit losses and any commentary on whether macro conditions, such as higher rates or a softer economy, are starting to pressure this segment. Fifth, deposits and lending balances. Deposits provide cheap funding and are growing fast. Continued strength in deposit balances and the cost of funds supports profitability. Also, keep an eye on student loan and personal loan originations. Any acceleration here is positive. Sixth, any updates on capital raises or use of proceeds. SoFi recently raised significant equity. Management might comment on how they're deploying that capital, whether it's pure organic growth, new product launches, or potential tuck-in acquisitions. The stock could react sharply tomorrow. A clean beat combined with upbeat guidance often triggers 10 to 20% moves in either direction. But again, one print does not make or break the thesis. SoFi's edge is building a full digital financial ecosystem in a huge addressable market. If member growth, product adoption, and margin expansion continue trending in the right direction over multiple quarters, the short-term volatility becomes just background noise. Which metric are you watching closest tomorrow? Drop your thoughts in the comments, smash the like if this helped frame things, and subscribe so you don't miss the post-earnings recap. Talk to you after the bell. Stay sharp.